Hello everyone, I'm Shivang Mehta. In this session, we are going to analyze Swaraj Suiting IPO. We are going to go through its fundamentals and valuations and find out that it is worth investing this IPO or not. So it is in textile manufacturing pattern, which is trusted over 20 years. It is based in Rajasthan and it is in profitable business, unlike many IPO, many startups which are launching its IPO. So it does not have any directly listed peer competitor. So make your bet, and this could be your next multi-bagger. Before we begin our analysis, please subscribe Yoshops channel for analysis of new bonds, NFO, NCD, IPO, ETF, and many more. Also visit yoshop.com and use coupon code YO100 for flat rupees 100 discount on all products you purchase and free 1 year GST and ITR e-filing service. So let's go ahead and analyze this IPO. So first of all, about the company, it is on incorporated in 2003. Swaraj Suiting Limited manufactures, produce and supplies textile products. The firm, the firm mainly operates in three key business verticals: manufacturing of gray fabric. Gray fabric is raw cotton, weaving of job work basis, and trading of finished fabric, gray fabric, and yarn. Initially, the company was engaged in manufacturing of cotton synthetic fabrics, but later shifted to trading in the synthetic fabric in 2009 by selling off its silver weaving looms to an associate concern, Swaraj Suiting Private Limited. The business re-entered into manufacturing of cotton and synthetic fabric in 2011 and started commercial operations in Jan 2013. Its manufacturing facility is in Bhilwara, Rajasthan, and having a total production capacity of 1.5 million meters, which comes up 15 lakh meters a month. It is also in the process of setting up a denim processing plant in Nimwa, Madhya Pradesh. The company is looking to expand and come up with new verticals of business. Coming to the financials of the company, so total assets of the company stands between 900 to 1000 crores, maximum 970 crores in financial year 20. Total revenue of the company is 817 crore in the last recorded quarter, and profit was 19 crore. Considering the revenue and profit after tax of the company, pro- net margin of the company after tax is very low. It comes out to be 2.5% and 3%. So any competition or any change in price of raw material or any capital intensive investment can turn the company into loss making company. So this has to be kept in mind. And total assets of the company, looking at the total assets and revenue of the company is looked highly overvalued. IPO details of the company. IPO is opening on 15th of March 2022, closes on 17th of March. Issue is fixed price issue IPO. So face value is rupees 10 and IPO price is fixed by the company at 56. Market lot of 2000 shares and minimum order quantity is 2000 shares. So it is listed on NSE SME, so it's a small scale IPO. So SME, it will be listed on small medium enterprises platform of National Stock Exchange. Issue size is of 10 crore 10 crore stocks, so 19 lakh 8,000 stocks of rupees 10 will be issued, fresh issue. So complete initial public offering of this company is a fresh issue and there is no change in, so there is no change in the shareholding. So retail shares offered is 50% and high net worth individuals can buy 50%. The 50% divisions, no specification for institutional investors and other institutions. So minimum is lot size is 2000 shares. So you have to at least spend 1,12,000 to buy at least one lot of share. And at this point of time, 99% of the company is owned by the owners, the Khan owners of the company. But after listing, only 73% of the company will be owned by the promoters of the company. So this might dilute further in coming times as well, due to it is a capital intensive industry and it might need more capital for expansion and diversification. Objectives of the IPO: to meet the working capital requirements for new expansion of product capacity in Nimua, Madhya Pradesh. As we know, companies looking to expand, so it is raising money for its denim plant in Madhya Pradesh. Meet issue related expense and general corporate purposes. These are the few objectives of the IPO. Valuations of the company: so diluted earning per share is rupees 6 per share. PE is rupees 9. PB, price to book ratio, is 0.65. So company is valued below its book value as well. So book value or net asset value of the company is rupees 85, and return on net worth is 7%. So as we discussed before, the margins of the company is really low, 6 to 7%, and it can turn into loss making company anytime. But also this IPO is very aggressively, you know, valued by the company, considering the market conditions and weak fundamentals of the company. Strength of the company: strong promoters, experienced management team, and well defined organizational structure. So are in this business for 20 years, so they have lots of experience and vision for the company. Strong supplier base for sourcing raw materials. So company have large group of vendors for the supply of raw materials, and to keep the operations going. Smooth flow of operations. So company has ensured the flow of operations. Quality assurance and standards. So company assures high standard of goods, and it has taken credibility from various institutions. Customer centric service and scalable business model. So this is a scalable business model, but company has to invest more and more money to scale, considering the turnover and capital intensive business being the two hurdles of growth. Weakness: so company do not have any competitive advantage, and net margin of company is really low. Companies in capital intensive business, and therefore in order to expand further, promoter might lose control of company due to equity dilution. This we have seen earlier, as after this IPO, promoter will own only 73% of the company. Raw material prices is highly influenced by international market, therefore companies vulnerable to supply and price shocks. So raw material, which is cotton, in this case cotton and synthetic fabric, raw cotton and synthetic fabric, is influenced by prices and demand in the international market. So it might kill the business of the company if price, goes to the rooftop. Company do not ability to create long-term wealth creation due to lack of vision. So company do not have any, you know ability to create long-term wealth creation due to lack of vision or any competitive advantage. So capital market is highly volatile right now, and due to geopolitical tensions and interest rate hikes, therefore strong response to IPO is not expected. Peer performance: so there are strong peers of the company like Trident, Raymond, Page Industries, whose market cap is much higher than the company at almost 50,000 crores, and they have given returns, in last since their inception. So if you are really looking to invest in textile IPO, then you should go ahead with well perform and trusted companies which are already listed, such as Page Industries, Trident, KPR Mill. In last 2 to 3 years, they have given multi-bagger returns. So should you invest in this IPO? So SME IPO are more those investors who was very high risk appetite and want to take bets, especially in current time when liquidity is low, interest rate hikes are coming, and geopolitical tensions are going on. Companies' financial are not attractive and is vulnerable to competition, killing the business due to already low margins. Company leveraging might be high in future due to capital intensive industry, leading to low EPS for investors. So it is advisable to avoid this IPO considering macro and micro fundamentals of the company. Now you have to consider your preference of wealth creation and which industry you want to invest and what is your risk appetite before investing in this IPO. Thank you.